It's Thursday once again. Let's take a look at some legacy charts for BNC, Brave New Coin. Man, there's some interesting developments in the legacy stock world going on. Gonna start with the usual correlations just to get a read on the room. If VIX historically is rising, we are more bearish than bullish, and if it's falling, we are more bullish than bearish. VIX has just been kind of flat over the past few months. The correlations we had previously held in these graphs below the VIX here, BTC against DXY, against gold, against SPX, and NASDAQ are all over the place. For the stock correlations, we're actually picking up positive correlations again on the 30-week rolling basis. For the DXY, we're also positive, which makes no sense. And for gold, we're actually increasingly positive on that correlation. Everything's kind of moving up together. Crypto obviously less so over the past week. But the correlations that make the most sense are BTC is a risk-on asset. We should be inversely correlated with the VIX. We should be correlated with SPX and NDX. And we should be inversely correlated with DXY and gold. Most people want BTC to be risk off. They want it to be a hedge against inflation, a hedge against chaos. But it, for the most part, acts as a risk on vehicle, and that's all of crypto. We just get more and more risk on down the list, down to mid caps and low caps and NFTs and all that other stuff. So none of this is particularly tradable other than really the VIX, but it's just interesting to see where we're sitting here. When I look at the DXY, for anybody who's watched these videos since the beginning of the year, I'd been talking about this inverted head and shoulders developing, then this cloud stuff where the TK lines cross bullish, then we get into the cloud. It's just a very predictable retracement to a 50% level. This cloud level is based on this high and this low. And as long as that high and low don't change, the 50% level remains the same. So we've hit that level. We've actually hit the loosely 1618 measured fib from the W or the Eve atom, whatever you want to call this down here. We got into that zone, which I've said for weeks is trouble for BTC, for everything, because we don't want Dixie to be bullish. A bullish Dixie is generally bearish for crypto. Hopefully DXY stalls out here and lets crypto do its thing towards the end of the year. At this point, if this were a trade in a vacuum, you'd enter the trade here if you weren't in already, and then you'd exit up here. And for me, I don't take any more trades after that until price is above or below the cloud. And that may be a year or more at this point for the DXY. The most bearish thing for crypto would be a further move up on the cloud here in the DXY. Bullish move for crypto would be DXY failing and going back down sub 92. Gold is looking better and better every day. This is a noisy chart visually, but all of this stuff is showing you congestion at that 1800 level. There's a yearly pivot there. There's the cloud there. There's the 50, the 200. There's this inverted head and shoulders triple bottom thing going on. And this also shows you we're above all that now for gold. So not only that, but it also has a bullish Kumo twist with bullish TK cross. It's got everything you'd want in a long, this is almost textbook setup. It's got a chart pattern. It's got the cloud. It's got the 50 and 200 behind it. It's got a yearly pivot breakout. This should really reach for this 2150, 2175 level quite easily over the next few months, which I don't think is super bullish for BTC if we are truly risk off. Silver also looks better and better by the day. You're starting to see the potential for a bullish Kumo breakout, bullish Kumo twist, bullish 5200 cross, and that's inverted head and shoulders playing out, bouncing on the pivot. So things are looking better and better for silver as well. SPX continues to just scream higher. How can you be bearish on anything that looks like this? It doesn't make any sense. No, they're just pumping money into the system and it's going up. I mean, that's really, I think, as far as the analysis goes, you just buy more and more every day and be happy till it dumps, right? NDX, same thing, all-time highs. We can say there's divs, we can say there's this, that, and the other thing. Doesn't matter. It just keeps going higher. And later on, when I get to some of these other individual stock charts, it's just breathtaking. We think crypto's impressive, but the Microsoft chart is absolutely insanity. GME still looks pretty good to me in a vacuum. I'm not going to trade this probably, but it looks really good for bullish Kumo breakout. It's above the 50, it's above the 200. It's above the resistance of this triangle here, and it has the potential for 500 plus towards the end of the year. It'd be quite interesting if this thing takes off again in like late Q4, early Q1. I don't think that's going to be the case, but it's certainly lining up for that to be the case. AMC, on the other hand, looks like a garbly mess. It's been in the garbage disposal for a few too many months. I found out not too long ago that I guess the US is one of the only countries that actually have garbage disposals. At least they don't in the UK. But anyway, it looks mangled. We'll say it like that. It's neutral at best, still above the 200 in and out of the cloud. I don't think there's a trade here just yet for AMC whatsoever. Coin's looking more and more local toppy and has the potential for this TKC clamp. You can see over time, as you get more and more overbought, as the Tenkin moves quicker than the Kijun, this gives you caution when you see this and tells you, yeah, you probably shouldn't add up here. You probably shouldn't stay heavy margin long up here, because sooner rather than later, you're going to see a mean reversion attempt. That doesn't necessarily mean we're going to actually complete a down move to 305, but it gives you a good idea that something's coming. So a move to 305 wouldn't be out of the ordinary here. And Hood, oh man, Robinhood just absolutely pummeled, down 63% now from all-time highs. This is a new all-time low today, down 7% on the day. There's no bullishness here whatsoever yet. This does not look good. I would not catch this knife. I would just let this thing go. I think there are a ton of people who are trapped at like 50 plus who still haven't panic sold yet on this. So I think this needs a ton of time. MSTR just as bearish as all of crypto. No surprise, it's basically 80% correlated to crypto anyway. The 4-hour 200 is around 680. That's a nasty up and down price action there after breaking the level it had been held beneath since February. So just not a lot of buyers up there in that zone. Doesn't look, it doesn't look bearish, but it looks rough. We'll say it like that. Tesla, I think this is just done at this point. I think it's a strong avoid. It reached its level that the TA said it should reach after this 9-month, 10-month consolidation, right? This is how TA works. This is how prices work. This is how people work, markets work. You find some range. If there's more buyers than sellers, you'll probably see that in the chart patterns, in the candlesticks, in the moving averages, in the volume. After that range gets taken out, either the highs or the lows, you can measure where that's probably going to go. Once it hits that target, now it needs another period of ranging consolidation. You've got people taking profit up here. You've got late longers up here. You've got all sorts of people. But it took 10 months to get up to here. So I'd certainly expect more than a couple weeks of consolidation. I just think this thing is to cool off a little bit. Twitter having a couple really big down days below the 200. And you can say this is like a one-of-one anecdotal pareidolia, but when you see a break of the 200 like this, both in July and recently, I mean, there are bots that are watching this. There are people who make bots that watch this. There are people who watch this. This is headline news on MSNBC or whatever when they bring up TA of anything. There's a reason. Maybe it's self-fulfilling. Maybe it's nonsense. But there's a reason people watch the 200-day moving average. There's a reason price reacts on those levels because everybody's watching it, right? So it's important to know which side of the 200 you're on for stocks, for crypto, especially as crypto gets bigger and becomes more stock-like. But anyway, it's below the 200. It's looking not good, right? This is not bullish by any means. And hopefully you find some cushiony support between 40 and 44 there based on volume. But any hopes for bullish continuation are certainly dashed at this point. Square looks more neutral than anything. Still hanging on by a thread here at the 200. Doesn't look bearish just yet. Again, this thing took a year of consolidation to get up to this level, right? And now it's got another year of consolidation to figure out what it's going to do. Most normal stuff doesn't just consolidate in a week and then go again, consolidate in a week and go again. That's not usually what happens for things like stocks. So here you can just map out the range to where above or below it. Then you'll have your answer. Here's a few newer charts in the legacy video that I haven't talked about in a long time. Netflix, another example of range. This was range bound for months. I probably drew this fib in March. I haven't really revisited this chart since then, but it did eventually play out the target between 616 and 650. It took 3 or 4 months after March for that to happen. But here's just another example. You make a range, you fib it out. There's your target. Okay, cool. It's that simple. And then the current price action is looking more and more like a rising wedge with a bear div here. So I'm not too confident that continues to explode to the upside. The difference between something like Netflix and Tesla having this rising wedge in a range versus rising wedging at all-time highs, I think is a bit different as far as expectations. Disney also down pretty significantly on that 200-day moving average break. I don't know if this is lockdown fears or just TA volume. There's a ton of volume up here, or at least there was. Definitely not looking bullish in any regard. Apple new all-time highs today. It is, this is the weekly, pretty crazy. Hasn't hit the 200-week moving average since 2019. It didn't even hit it in Corona 2020. Maybe this is even 2018. In a vacuum, you'd certainly be calling for a down move here, but it's going to take 6 months. I mean, this is the weekly, it's a stock. It's going to take a long time for this rising wedge to play out. If it plays out as you'd expect, which is a bearish reversal based on a multi-year bear div on the weekly with a rising wedge. These are not typically bullish things. And this is the Microsoft chart on linear. I don't know why, but I've never seen this before. Maybe I've never looked for it, but it is breathtaking. Look at this parabolic move. I mean, you hear analysts talk about crypto being a bubble, a scam, this isn't normal, blah, blah, blah. And then you look at charts like this, and it's like, yeah, of course. This happens everywhere. It doesn't matter what it is. Obviously, it's Microsoft, and it's a big deal. It has a real world use case and market, blah, blah, blah. But wow, that is an insane chart. It's up like 1,300% since 2011. Recently hitting all-time highs this week. And if this thing collapses, it hasn't hit the 200-week moving average since 2013, almost 10 years. So that's going to be an ugly move to the downside when it happens. And I can see why the legacy bears have been bearish for so long. The problem is you can't be bearish on this. This is a 10-year plus trend. You can't be bearish on this until it breaks down. You just can't. It's literally too bullish. You're going to get bulldozed every time. This is Corona 2020. It is a blip compared to what's happened since then. So blink and you'll miss it. Maybe this is top things because I'm finally talking about it, but what an insane chart. Google as well. I forgot to put the RSI on here, but this is the first bear div on RSI since March 2020. So maybe tech stocks have finally topped out. Recently, I've been following the Grayscale discounts, premiums, semi-closely. These are the pink sheet non-ETF funds and holdings you can participate in as a legacy player. For the most part, they've been extremely negative ever since the ETF news and announcements hit and have stayed negative. It's also a good sort of sentiment gauge for how does legacy view crypto right now. It's weird that LTC has a 10% premium, Zcash 16, Stellar still is 135% because of a lockup. For the longest time, all of these had premiums because of vesting or lockup schedule, where if you bought, you couldn't sell until six months or a year, whatever it was. So it's worth just checking this out every once in a while. What's Barry up to? What's Grayscale doing? Are they trying to push for ETFs still? Are they buying back ETC, for example, was that like a negative 51% discount? And they're interesting to watch because they're so big at this point. I mean, this is 38 billion, ETH 13 billion. So what they do can have a big impact on legacy sentiment. Lastly, let me just mention the ETHBTC fund and DeFi portfolio I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation. You can see we're in 29% USDC here. You can see we're on a few volts on YearnComp and Aave, as well as all of the trades I make in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.